Hello, everyone. My name is James Ford, and this is the Pragmatic Investor. Today, I am joined by fellow essay contributor, Trading Places Research, who is the author behind Longview Capital. In this conversation, we dove deep into what AI is, what the implications are going forward, and why NVIDIA in particular is so well positioned to benefit from this coming AI revolution. We also talked about what the challenges and threats NVIDIA faces are now. We talked about whether investors should buy NVIDIA now, and also about what other opportunities related to AI investors could benefit from today. To round off the conversation, we also talked a little bit about the macro outlook, and Trading Places Research also added his own stock to our pragmatic investor portfolio. He made a very compelling case for why the infrastructure sector has been so overlooked by investors and how you can benefit from it. Be sure to check him out on Seeking Alpha. You won't regret it. And if you haven't already, please subscribe to the podcast. It really helps out. Share, like, and you can also find my own stuff, James Ford, the Pragmatic Investor, on Seeking Alpha. As always, I hope you enjoyed this conversation as much as I did. Welcome once again, everyone. I'm joined by fellow essay contributor, Trading Places Research. Thanks for coming on.
Thank you. Thanks for having me. This is going to be fun.
All right. So the topic of the duo today, of course, AI. It's all about AI. ChatGPT might as well be running this interview. What are your thoughts?
Well, one of the running jokes I have at my service, Longview Capital, is that, can it replace me yet? I'm not worried yet, but who knows? Anyway, so I think we should do a little history lesson. Start with a little history lesson. Talk about how we got here. A little brief history lesson to talk about how we got here. Okay.
All right, let's go for it.
The modern era of AI starts in 2012, really. But there's a long history that goes back to the 50s and very famous mathematicians predicting that we'd solve the problem within a decade. Of course, that didn't happen. But let's fast forward to 2005 is when NVIDIA starts getting interested in all this stuff. Okay. They're called what they make are called graphics processing units because that's mostly what they're used for. But the trick really is that they're good at floating point math. Okay, there's two types of math in computers: integer math and floating point math. Integer math is computationally cheap. Floating point math is computationally expensive, and GPUs do that well and in parallel, and you can make nice graphics with that at a high frame rate. But NVIDIA around 2005 realized you can also do a lot of other stuff with that. One of them being AI, right? But there's a lot of other things, and fluid dynamics and protein folding and all this very heavy-duty mathematical stuff. But the big trick for AI is matrix multiplication math, floating point matrix multiplication math, and that's what NVIDIA GPUs do so well. And in 2012 is when the modern era starts with something called AlexNet, which is the first really good image recognition system model. And it was built on NVIDIA GPUs, and that started this huge revolution in the growth of models size, right? Because NVIDIA GPUs could handle bigger models. Before this, models grew roughly at Moore's law rate. After this, explosive exponential growth in model size, right? And NVIDIA starts making software and hardware that works together to solve all these big problems. And now they're not just making these quote unquote gaming GPUs, right, for graphics for their old purpose, but they make data center GPUs, which are very, 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 very expensive. And all the software that goes with it, and it's a complete system, and it's the only, because they've been doing this for so long, it's the only complete system of software and hardware that works together and does this stuff well, right? But up until just a few years, 2 years ago, right, the biggest models in the world were literally playing games. They were playing Go. The biggest model in the world was AlphaGo, and it was playing Go, the Chinese board game. It was very good at it, right? But it's playing games.
Right.
So then comes Chat GPT, right? A large language model, right?
Mm-hmm.
And all of a sudden, it's not playing games. It's actually doing stuff that can be useful in commercial usage, right? So up until this point, the big expense in research was building these models, right? All the
Mm-hmm.
money's going to NVIDIA. The key thing to remember is models keep getting bigger and bigger and bigger, exponentially bigger,
Mm-hmm.
and all the money's going to NVIDIA.
Right.
Those are
So
the two.
something like ChatGPT then requires a lot of GPUs, right?
Okay,
in layman's terms.
depends which. Yes, but if you're talking about GPT 3.5, the original from last year, right? That's a
Mm-hmm.
manageable expense. Operating GPT, something on the scale of GPT 4
Mm-hmm.
at scale, at something like a Google search scale, is
Mm-hmm.
impossible. It's right now, that's just way too expensive. Hundreds of billions of dollars a year at Google search scale, right? And expenses.
Uh-huh.
That's just too, and you can see it in the difference in the API. It's like a 50 times difference in the API cost between GPT 3.5 and
Mm-hmm.
GPT 4,
Right. What's the
right?
difference in those costs? What's driving the difference in those costs?
NVIDIA. There's the inference, there's just much more what they call inference. It's predicting what a large language model does is it's predicting the next word or next series of words. It's a guessing machine and it's very, very, very good at it, right?
Mm-hmm.
It's just very, very good guessing machine. What's the next word? What's the next phrase? What's the next, how does that fit into a paragraph? Should I go back and change a word back there because of this word I just chose, right? Anyway, that all takes a lot of GPU power. And we're mostly talking about NVIDIA here still. And their A100, H100, they call it the DGX platform generally. That's their branding. And it's just so much more expensive to do something. The expense goes up as model size goes up, expense goes up exponentially. And when you're doing for research, that's expensive, but you're not trying to put it into production at scale. Now
Mm-hmm.
that all these things are moving into scale, NVIDIA is a problem for everyone, for everyone.
Mm-hmm.
Okay. And I'm talking, they're stealing margin from Microsoft and everyone smaller than Microsoft. They're stealing
Mm-hmm.
margin from everybody because they get 75% gross margin, something like that, on their data center GPUs because they substantially have no competition, right? They're essentially a monopoly, right? Their moat is it's the only complete solution.
Mm-hmm.
You could try to piece together other hardware with other software and it would probably work, but it's a pain in the butt, right? You go to
Mm-hmm.
NVIDIA and it's just all ready to go. They've been working on it for over a decade now, almost 2 decades now, right?
Mm-hmm.
And Jensen Huang really saw where the ball was going, where the puck was going here. Many, many years ago. And I think the shares are overpriced, but there's no arguing with the growth story, right?
Mm-hmm. Right.
Um,
It's very
so anyway,
interesting. You talk about NVIDIA having basically a monopoly. I think a lot of people, think about the chip makers and they think, well, NVIDIA's run a lot. Maybe I should buy AMD. But probably that's not so much the case, right?
no, no, no. People don't understand to the extent to which NVIDIA is taking all the money. So,
Mm-hmm.
and okay, so there's two things driving that: size of models, right, and
Mm-hmm.
all this time and money, R&D that NVIDIA's put into this to create what they have now in 2023. That's ready for this moment, right? That
Mm-hmm.
was just ready
Right.
for this, right? I mean, you got to give Jensen Huang full props.
Mm-hmm.
2005, started working on this, right? Anyway, so I think the incentive right now is twofold. One is on the hardware side to cut out NVIDIA, right? Figure out a way to not use GPUs. I think it won't, if NVIDIA gets disrupted on the hardware side, I don't think it will be another GPU. I think it will be, there's this kind of class of hardware forming called, generally called AI accelerators. There's a few different types, right? And they do a workaround. They're still doing integer math, going back to the original thing I talked about. They're still doing that cheap integer math, but they fake the floating point math. So there's less precision, but most AI training and inference doesn't need full precision, right? You can get it. So Google's been working on that since 2015. Right? They call them TPUs, tensor processing units. And those are for at Google Cloud. I think that's a huge opportunity for them to disrupt NVIDIA's hardware. They need to put it together with software in a complete package like NVIDIA has, but it's really very impressive hardware. They're on their 4th version of it now, and they're for rent on Google Cloud. And they use it internally. That's what Bard runs on. That's what their models run on, right? They're the only ones who are running anything at scale, not on NVIDIA, right? So that's the one trend is let's cut out NVIDIA's legs on the hardware side by kind of fudging the floating point math a little bit, right? And it seems to work pretty well. It's working well for Google. Is my view, at least. And then the other side of that is trying to make the models smaller, trying to make smaller models better. And that's a more recent thing, okay? And so let's back up a bit. So last year, ChatGPT comes out, and there's all these companies, large and small, working on natural language processing. And they look at what OpenAI released, and they're like, oh my God, we suck. Right? And so a lot of them, including Facebook, open sourced what they had to try to gain, because they saw Stable Diffusion gain a lot of traction that way as an open source image generator, right? And so everyone's like, open source, it's free. People start playing around with it. You don't know what's going to happen next, right? So Facebook, what happened next was Facebook releases this thing open source. Stanford researchers get hold of this thing, and they are just developing this. It's a much smaller model than anything that's coming out of Google or OpenAI and their partnership with Microsoft. But they're doing an amazing number of things, these Stanford researchers and other people in the open source community, with these much smaller models, working on trying to get them to work better without increasing the model size, thus increasing, and remember, model size, compute costs go up exponentially with model size. Keeping your model size small is like, that's going to be a huge game here until NVIDIA gets disrupted on the hardware side. But until then, so what did Google just announce at I/O? Palm 2 is smaller than its predecessor, not larger, smaller, right? And there's 4 versions of it. The smallest version can run at the quote unquote edge, meaning your phone, my phone, your computer, my computer, right? And be okay. Not GPT-4 is the same, is the gold standard, right?
Right.
It's also too expensive to run at any sort of scale. It's slow. My experience with it is slow, and it's, I pay for GPT Plus, so I get access to it. Anyway, so that's the main conflict right now. Is NVIDIA's at the center, but they're taking all the money. They're taking all the money, and everyone, Mike, you think Microsoft's going to sit still for that?
Right.
Their cloud margin is down 4 quarters in a row now.
Mm-hmm.
Do you think Microsoft, the most famously competitive company in the entire world, is going to sit still for that? They are not. They're working on an AI accelerator and other things to lower their costs because they know it's unsustainable to keep paying NVIDIA this much money every year.
Okay, right. So that's why their margins are down because they're spending too much on these GPUs of NVIDIA.
Right. Started with their partnership, right? They didn't really have Azure. They didn't really have GPUs in Azure, right? So they formed this partnership. They gave them $1 billion, and remember, a lot of that's free Azure. A lot of that $1 billion,
Right. Yeah. Right.
right?
Yes.
And now they have another 10 billion on top of that over several years. Again, a lot of that's free Azure. But they didn't have cloud infrastructure yet, and so they kind of learned. They built it specifically for OpenAI, right? They built what is now their cloud infrastructure specifically for OpenAI to build DAL-E and GPT and the two versions of GPT that they've released in the last year. But they keep having to add to it because it's all OpenAI sucking up all they're internally they're time sharing internally at Microsoft on GPUs because OpenAI is taking up all their infrastructure. So, that's I can't emphasize this enough. NVIDIA's taking all the money.
Right.
And
It sounds
unsustainable in my view. How long that takes is the
right. That was
big,
going to be my next question.
literally $1 trillion question. Literally $1 trillion question as of today.
Mm-hmm.
So.
Right, because the way you put it, it seems like NVIDIA, it's gotten too big, it's attracted too much attention now, and basically now it's NVIDIA against the rest of the world, with the rest of the world, of course, being those big players, Google, Microsoft, just trying to stop this and trying to do something about it, right?
Right. They have to balance it, right? They need to keep good relations with NVIDIA because there's limited supply of these things. NVIDIA's continually had a supply issue. I never really understood it, although they seems to be clearing up a bit this year, given their guidance. That's what their guidance was about, basically. The huge jump in the guidance was basically about Apple vacating 4 nanometer at TSM's foundry and for 3 nanometer, and NVIDIA coming in behind them for these GPUs. Because also the other moving part is they were selling a lot of these quote unquote gaming GPUs for crypto mining, and that's way down.
Right.
So they now can use more of their foundry reservation, their 4 nanometer foundry reservation for the much more expensive data center GPUs, which are like I use as shorthand $10,000 a piece, but I've seen them as high as 40,000. So yeah, so they've been in short supply. So if you're one of these companies, you have to dance this dance, right?
Right.
Which is I need to buy a lot of these now, but I want to get, I want to wean myself off the heroin. So it's a difficult thing. It may take a long time to get off the teat. It's NVIDIA's taking all the money.
It's interesting you talk about dancing that dance and the supply issues, and in a way, isn't that kind of what the US has been doing with China, having to dance that dance because of the fact that I believe NVIDIA and a lot of those chips are getting manufactured in Taiwan, right? And is that something you're concerned at all about the supply coming from there?
I am not as concerned as most people. Unfortunately, I love TSM as a stock, but I think it's always going to be undervalued because of the giant risk factor across the Taiwan Strait. But I think the risk is overblown. I think the Chinese leadership has a much longer view than we do.
Yeah.
And West. And I think they think they're winning. They
Mm-hmm.
just got Hong Kong back without firing a shot. And I think they're going to get Taiwan back the same way if they just keep playing this slowly. I think the most dangerous thing is if they start thinking they're losing. That's
Mm-hmm.
how we got Pearl Harbor.
Right.
Japan started thinking they were losing and they had no other choice.
Mm-hmm.
Right? If the risks of, I think Biden's made very clear that this starts World War III. I think if they invade
Mm-hmm.
Taiwan, right? I think he and previous presidents have as well. At the same time, mouthing the lie of one China. Everyone knows it's a lie. There are obviously two Chinas, right?
Sorry, what do you mean by that?
Oh, okay. So there's this thing China forces everyone to say out loud in order to have diplomatic relations with them, which is
Mm-hmm.
that there is one China and this is just an unresolved issue,
Oh, right. Okay.
right? It's a lie, quite obviously. There's two Chinas, obviously. Um, but everyone has to, if you want to have any sort of relations with them, you have to say that out loud. I think it's a silly lie, but I get why people keep saying it. But anyway, I think that was a good observation. It's a delicate dance. I think the big danger is making them feel like they're losing. I don't think they're winning, but they think they're winning.
Right.
And as they think they're winning and I don't think they're winning, I'm happy with that situation, right? People still risking their lives to break into the United States of America.
Yeah.
Nobody and European countries, right?
Mm-hmm.
Literally risking their lives. Every day this happens. Nobody is risking their lives to break into China.
Mm-hmm.
When people start risking their lives to break into China, I'll worry.
Right. That's a very good point. I mean, you hear all the talk about the downfall of the US dollar and downfall of the US, but yeah, like you say, it's still just about the land of opportunities. It might be going downhill, but it's still doing all right.
As long as there are literally people lined up at the Rio Grande, literally every day, trying to get across. I mean, that tells you something. That tells you everything you need to know. People vote with their feet.
Yeah, absolutely. Actions speak louder than words, right?
Exactly. People dying on the Mediterranean trying to get to Europe.
Well, we do have very good weather in Spain where I'm from, so I can see why they're trying to get there. It's beautiful.
Where are you in Spain? I'm thinking of moving to Spain. Sounds so wonderful.
Really? I'm not in Spain right now, but originally I was born and raised in Barcelona.
See, that's what I'm thinking is Barcelona.
It's an amazing city. Can't
Living
recommend it enough.
Yeah, I mean, living there. I visited. I think living there would be fabulous. But anyway.
Anyway, back to the investing. I just wanted to ask then, since of course we have this issue with the chips in Taiwan, and we have had kind of a reaction from the US with that kind of I believe it was called the chips initiative, right? Is there an opportunity then for that investment that's coming in for foundries in the US? Is there an opportunity in that space? Maybe a company like Intel, for example.
We can do a whole podcast on Intel. My generally speaking, because it's not just the US, the EU has subsidies. Germany, in addition to the EU subsidies, has subsidies. India, South Korea, China. I'm probably leaving people out. The chip subsidies are going crazy, and when you subsidize something, you get more of it, and you're going to get oversupply, overcapacity. That's what I think. There's going to be overcapacity. I don't know where exactly and how, but I would imagine the U.S. has a big issue, and everyone understands this, and they're working on it, but it can't get solved quickly, which is software kind of ate everything in the U.S. Because the margins are much higher in software than hardware. So all the investment went to software. And so students followed that and got computer science degrees, not electrical engineering and industrial engineering degrees, those kind of sciencey engineering types, right? And so we have all these software people, computer science people graduating, And all the people in electrical engineering and industrial engineering are immigrants from Asia who have to leave after their student visas expire.
Right.
Right. And so we got to change this. You need a lot of industrial engineers in a skilled workforce.
Mm-hmm.
And that's going to take time. And that's not going to happen overnight. That's the biggest thing holding back the US in particular, is the labor force issue. One of the
Mm-hmm.
great things that Taiwan has is a skilled labor force and great network effects with that. And just, when TSM, okay, quick story about the Asia versus the US in manufacturing, right? At scale. Mm-hmm. Original iPhone. Mercurial Steve Jobs, decided almost last minute that he didn't like the plastic screen of the original iPhone, and that they were going to go with Gorilla Glass that they had only recently sampled from Corning, right? Mm-hmm. So their manufacturer, Foxconn, had to retool the whole factory like in less than a week for the glass screen instead of the plastic screen. And you can't do that in the US. Bring that right. many industrial engineers online very quickly and bring them in and have them retool the whole factory because the CEO is a bit mercurial, So the US can never match that.
Right.
And I just think there's going to be oversupply, and Intel's going to be there's putting a lot of money into that. So going back to Intel, and it's unclear whether they can catch up with TSM. Anyone can catch up with TSM. They have a big lead. A lot of the money's going to ASML.
Okay.
Because they make the machines that range in price from 160 million euro to now 350 million euro. Mm-hmm. That make this all possible, make these high-end chips all possible. Because without them, they're the only, back to substantially having a monopoly. There you go. There's another one, ASML.
ASML.
Yeah.
That's interesting because we're talking about NVIDIA, which of course, has skyrocketed. And I believe you actually said you believe it's overvalued. So I'm just trying to think in terms of actionable investment ideas. Where can people profit now from AI? I mean, we've talked a little bit about Microsoft, which I think, because of that partnership with ChatGPT has actually kind of caught that wave a little bit. Google, on the other hand, I'm looking now, for example, NVIDIA up 5%, Google pretty much flat on the day and kind of underperforming a little bit. Let's go into Google a bit. Is that, for example, an opportunity that you see there in AI? And also, what are some of the other
sorry to interrupt. Yes. I don't have great confidence in Google management. I'm going to start there because they have a great opportunity here, but I'm a little wary of Google management. Mm-hmm. They're getting better, but they've always had a focus problem, and they understand that at least now. At least they understand this now. Okay. But I don't know how they're trying to turn a huge ship around with this. But here's again what I think their play is. Number one, those TPUs in the cloud are much cheaper. You can save about 40 to 50% doing the same work on a TPU, a cloud TPU versus a cloud NVIDIA setup, right? Okay. But again, there's a software issue there. You may not be able to because of a software issue, right? Mm-hmm.
Right.
But that's, I think, a huge disruptive. They own it. They're the only one who host it. That's a huge for the cloud portion of this. Mm-hmm. Okay. Which I think is a big pick and shovel play here. Mm-hmm. Right. Even though I think there is a trade-off in the cloud business right now, which is they're trading off higher growth for lower margin. And guess who's stealing that margin? NVIDIA, of course. Anyway, so higher growth, it's basically it's a good thing, but higher growth, lower margin. Right. So that's one end of it, is the cloud portion. The other thing is what I talked about with Palm 2 being smaller than Palm, running at substantially lower costs than Palm, and maybe running at the edge. I can't express how important that's going to be in just a couple of years, running on your phone, my phone, your PC, my PC, not running in some server off somewhere, right?
Mm-hmm.
But
Okay.
private conversations you're having with your phone, right?
Right. Mm-hmm.
On the level of what we're doing now. And that there needs to be a lot of work, but I love that Google understands that's where it's smaller is better. Small is beautiful, right? And even though GPT-4 is the best and the largest, because the best because it's the largest, people are trying to figure out a way to change that,
Right.
right? And I think Google has really the right idea here on that. I worry about their management, but they understand the cost structure can't keep up like this,
Mm-hmm.
right? The cost structure of where things are headed. You know, OpenAI is not working on GPT-5 anytime soon because it would just be absurdly expensive to train and run in production.
Right.
It just doesn't make any sense, right? So they're just going to keep trying to make GPT-4 better and less expensive to run, right?
Mm-hmm.
Yeah. So I like Google, and I haven't picked up any yet because I have concerns about that.
Okay. And are there any other maybe lesser known names, or perhaps even kind of diving into more just sectors that are going to benefit from AI and perhaps could offer an opportunity here?
Well, I think this is going to be an internet sort of thing
Mm-hmm.
where it's just, if you're, I don't know how old you are, but if you're old enough to remember kind of what basically happened was it was this one-time thing of like changing everybody's margin profile, right?
Mm-hmm.
In a good way, right?
Mm-hmm.
And I just think we're just going to generally see that across the board. The earliest place is going to be in manufacturing, um, visualization and optimizing and automating factories. Kind of the way technology works is, it starts with military applications because the Defense Department has the most money to throw around on
Mm-hmm.
these. And then industrial customers have enough, and then consumers have enough, right? And so I always like industrial applications on these things. And again, NVIDIA just did yesterday or day before yesterday a wonderful demonstration in Taipei of their industrial visualization and automation software.
Mm-hmm.
Uh, that's kind of amazing, right? So that's an area I think is going to be really big. But then again, there again is NVIDIA stealing from everybody else, right?
Right.
Here they are again. They are so prepared for this moment; it's staggering. Um, uh, this is the basic problem right now: is all these trends that I'm describing favor large pick and shovel plays until this frenzy is done.
Mm-hmm.
Because we're in, a lot last week this kind of meme sprung up. I don't know if you saw it, that like Cisco in 2000 is the same as Nvidia in 2023. Did you see that floating around
Uh,
the internet?
right. Yeah, I believe I actually saw a recent article on Seeking Alpha kind of making that comparison as well.
Right. And I think it falls down because Cisco didn't have the kind of monopoly stealing everybody's margin type of thing going on that Nvidia
Mm-hmm.
has going. But I mean, it stands up in the valuation sense. You
Right.
know, they're both, they both got ridiculously, and so I tend to avoid. I know people get excited by this stuff, but I'm an old guy with a lot of patience,
Mm-hmm.
and I tend to wait for these frenzies to collapse
Right.
and buy everything when after the collapse,
Mm-hmm.
right? Because my service at Seeking Alpha is called Longview Capital, and I like buying things and sitting on them for a long time. I like looking at long secular trends, waiting for the frenzy to end, and then just buying it. Are you familiar with the Gartner Hype cycle?
I do not. I may have seen a chart. Could you just run me through that?
I mean, it's better to show a graphic of it, but since we're on since that doesn't work on a podcast, I'll describe it. Gartner's a tech research firm, and doing this stuff for a lot of years, and they do this one thing that everyone loves called the hype cycle. And basically, it's this line that shoots straight up, then straight back down, and then goes slowly back up. Right?
Right. Yeah. I'm looking at it now. Yeah.
What do they call the peak? The peak of what?
Peak of inflated expectations,
We're at
followed
the
by
peak of.
trial of disillusionment, then the slope of enlightenment, and then the plateau of productivity.
I
Is what
like
I'm.
to buy in the trough of disillusionment. That's
Mm-hmm.
where I like to get in, is the trough of disillusionment. So
Right.
we're on the peak of inflated, somewhere around the peak of inflated expectations,
Mm-hmm.
until
Right.
the ridiculous reaction to Marvell's Friday earnings. I thought we were past the peak, but we're not. The Friday Marvell earnings, they were up 20 something percent because they said the word AI 98 times in the
Right.
and they
I,
let's get
I
real.
believe Google was over 100 on theirs.
But
Not that it
Google,
did them much good.
but look, Google's been working AI as long as anybody, right? On the
Right.
software side, and also since 2015 on the hardware side. Google was everybody's sugar daddy at Stanford for a long time, right?
Right. Mm-hmm.
They had Larry and Sergey came from Stanford. They had a really good relationship with the computer science department there for a long time. That has since gone sour, a little sour. I won't say sour. I'm sorry. What were we? I lost track of what we were just talking about.
We're talking about the hype cycle. You
The
talked about
hype
the
cycle,
Marvell
right?
earnings and the reaction
Yeah,
to
I
that.
mean, Marvell makes memory. They make network controllers and storage controllers. Again, there's nothing there because NVIDIA is taking all the money.
Mm-hmm.
These servers cost like over, they cost anywhere from $100,000 to $400,000. These big AI servers, and again, all that's going. It's like 80,000 of that from the get go, and then more on top of that goes to NVIDIA, right?
Mm-hmm.
Probably more than that, probably closer to 100 grand. So it's just everyone else is competing for the scraps after that. Intel or AMD gets a big chunk on the CPU, right?
Mm-hmm.
And then there's a big RAM component. If one company like if you're building a server and one company gets, I think SK Hynix sells NVIDIA the RAM that's on the GPUs. That's quite a lot of
Okay.
RAM.
Okay.
Then you got to put a lot of RAM in the server, and then you need some local solid state storage. So all those are all RAM companies. I like the Koreans there mostly, so especially SK Hynix.
Mm-hmm.
And the problem with Samsung is they're in so many businesses that memory, it's only part of the story. Whereas
Right.
SK Hynix, it's more their core business, right?
Mm-hmm.
Micron, of course, is pure memory, but they got China issues now.
Right.
So
Mm-hmm.
something going to be something like 25% of their China business gone.
So now this question that of course has been on a lot of people's mind. You've heard Elon Musk come out and talk about this. Are you concerned at all about AI in the future?
In the future, yes. And I think we very much have to start thinking about these issues in a very broad public dialogue, right?
Mm-hmm.
And
Right.
and everyone needs to get involved, right, with this. I also think when I read statements like the one did you see the 22-word statement that came out today?
No.
I'll send you the link when we get off. There was a 22-word statement that came out today that was signed by every single person in AI, from the most important all the way down. And I can't help but note that all the commercial signatories, like Sam Altman, CEO of OpenAI,
Right.
and other CEOs of AI companies, a regulatory wall that's a barrier to entry, moats, not such a bad thing for them, maybe. Regulation,
Right, of course.
right? Regulation that forms a moat for us is good. All other regulation is bad. Like the EU bill, you're not in the EU, you're in the UK now, but anyway, that they're not happy about this EU bill, this EU AI bill. So
Right.
because they're making people show their data, they're going to make people show their data, and that's going to open up a whole bunch of copyright suits. They're coming anyway. The copyright suits are coming anyway.
Right.
Because these things are all trained on copyrighted material that they mostly have not received permission for to use.
Right. Of course.
Right. So, but I do have long-term doubts. These things are nowhere near,
right,
dangerous, right? They're
it's
dangerous for
interesting.
misinformation. They're dangerous for misinformation. That's the near-term problem, that they hallucinate so much. I'd say, they're great bullshit machines. Look,
Right.
they say bullshit with incredible confidence in a very convincing manner. That's the big near-term danger as far as I'm concerned. And especially if you're Microsoft and pushing this out to all your commercial customers, pushing out bullshit to all your commercial customers, that's a big danger to a reputation that they've gained in IT departments for a lot of years. Google pushing a bullshit machine into search, right, is dangerous. I call this Zillow risk, giving AI too much responsibility too early.
Right.
Zillow had an AI buying and selling homes, so many homes, so many billions of dollars worth of homes, that they were able to lose $420 million when it went south on them.
Right.
Right. I call this Zillow risk. Don't give AI too much responsibility that can cost you a lot of money if it goes wrong. And I think a lot of these big companies are opening up themselves to reputational risk with their main products, Microsoft and Google particularly. If you notice who's silent on all this, Apple. First time I've mentioned them. First time I've mentioned the largest company in the world. Right?
Interesting.
Yeah.
Tell me more.
Well, because first of all, Apple does not discuss future products, as Tim Cook reminds analysts every single quarter, right? But because they understand that these things are not ready in an Apple way, in a complete working 99% of the time kind of Apple way. They're not ready for Apple, right?
Right.
Maybe Google and Microsoft are comfortable pushing bullshit machines onto their prime product, onto their primary products. Apple is not comfortable with that at all, right? They're not going to put something that puts iPhone in danger just to be part of the frenzy.
Right. Yeah, that makes a lot of sense, and it's interesting to get that kind of take on more of the downside risk when everyone is so hyped up. I don't know if you read a few weeks ago, I believe there was some company maybe in Japan or something that, obviously it's a gimmick, but it appointed an AI as the CEO, and of course the stock jumped up 20% on the day or something like that.
It's just we're into this weird meme. Look, the market breadth is terrible. Everyone's casting. They see NVIDIA. Everyone's casting around for the next NVIDIA. That's where we are right now.
Right.
Nothing's working, so let's find something that works. So we're into meme stock territory. I'm an old guy. I'm in my 50s. I don't understand meme stocks. I don't understand the logic. So I stay away from things I don't fully understand. So that's I stay away. I try to stay away from these frenzies. I know a lot. It's just not my skill set. It's just, trading these types of frenzies is not my skill set. I just give you my most successful example. I started going heavily into Apple in 2005. My I still own almost all of it, and my average price is like under $2.
Wow.
So yeah, that's the kind of thing I look for. Is
Mm-hmm.
something I start buying, continue to buy, and just sit on for a long time.
Mm-hmm.
You know,
Yeah.
and
Uh,
Nvidia was going to be one of those until
mm-hmm.
the price got crazy during the pandemic. I got out in 2000. You know,
Mm-hmm.
um, Tesla was going to be one of those, but I got out because
Right.
it became a meme. I don't understand these meme stocks. I don't get it. So
It speaks to a lot of things, I think it obviously it speaks from a fundamental side to all the frenzy in terms of liquidity. I think it also speaks maybe to what you might want to call it, kind of the new generation. What is it, Gen Z and the millennials trying to make a quick buck. This kind of stuff that's happening with crypto millionaires overnight, and that's kind of maybe just the idea that's going around with investing now, kind of percolating through.
I think that's a good observation. I think that's a good observation. Look, I'm perfectly willing to admit, though, I'm pretty good, as you might have realized, I'm pretty good at tech,
Hmm.
understanding what's going on. I'm a dinosaur, you know, and things work differently now in the market than I'm accustomed to, and so I have to do what what's worked for me, what works for me always, which is finding these long-term secular trends. In that case, in the case of Apple, the secular trend was the touchscreen for smartphone.
Hmm.
Netflix, streaming video. I was a Netflix investor like right from the beginning. I was so hopped up on them
Hmm.
way back. Um, but that's the kind of story I look for. And so right now, I'm gonna wait till this passes, and then I'm gonna start investing more heavily in all this AI space, especially because then and also I'll have a much better understanding of it by then, because
Right.
the pace of development is so insane on the software side. Like the people at Stanford have gone crazy with it. The Facebook model I mentioned is called Llama,
Hmm.
and they created a public version called that works for everybody on any platform called Alpaca. The Stanford
Uh-huh.
people did,
Right.
and they did a nice alpaca icon too. And everyone's building stuff on that. The most craziest. Do you know what autonomous agents are?
Nope.
Oh God, these are coming to you soon. So this is just a couple of months ago. Some researchers at Stanford built this on top of the alpaca language model, right?
Uh-huh.
Which is started off with Facebook open sourcing their language model. And it's basically, think of them as non-player characters in a video game, except they're working on their own. They're making
Uh-huh.
decisions and doing tasks within a prescribed world, and
Okay.
interacting with other autonomous agents and interacting with humans and learning. And
Hmm.
it's a little terrifying and impressive. And soon we'll see these in video games as non-player characters. That's obviously going to be the first usage of these.
Hmm.
They are a little unpredictable, so it's going to be kind of crazy when they first come out. But I just saw a crazy demo somebody did of an autonomous agent in Minecraft, building worlds in Minecraft.
Hmm.
It's fairly hypnotic to watch this autonomous agent go to town in Minecraft, but it's not gonna end with gaming. That's just gonna be the
Right.
first low stakes, very low stakes
Hmm.
test of how that works, because the stakes are low in gaming, right?
Right. Hmm.
If an autonomous agent says some crazy stuff in the middle of a video game, gamers will just laugh it off, right? They think that's funny. So stakes are low, and those things are going to be everywhere. The customer service reps are all gone. They're all going to be autonomous agents,
Hmm.
stuff like
Right.
that to start, and then it's just going to keep going. So,
Eventually, we'll be wondering if we're all autonomous agents.
oh yeah,
That,
I worry every week. I check in. This is moving so fast. I literally check in every week. Am I obsolete yet? Is my service at Seeking Alpha obsolete yet? I check in every week. The answer is definitely not even close. That's the answer so far. But I check in every week because development is crazy. The pace is crazy.
Well, there you
So,
go. I breathe a big sigh of relief. I'm glad that we're not quite there yet.
well, did you
um,
see the story of the lawyer who tried to have a GPT write a brief for him and with citations, and it was all hallucinations. It was all bullshit.
right,
And,
yeah.
and the judge was unkind.
Now, now we've talked a lot about AI. I do want to talk a bit about the macro outlook. Before that, though, just one last topic on AI. Another big AI company, which is Palantir. I've discussed this in a couple podcasts. I'd love to hear your thoughts.
Um, you shouldn't hear my thoughts. I'm biased on Palantir.
You're biased, okay?
I'm biased against them and shouldn't hear my thoughts. They're probably a good company. I don't want to talk about them. I hate them.
All right. Well,
I think they're an evil force in the world. I'm sorry. I think they're an evil force in the world. And I've never invested. I knew Facebook was going to be huge, but I never invested them because I think they're an evil force in the world.
right.
And so I do have my limits. And I think Palantir is one of those companies. So
All right. There you
sorry,
go.
I'm biased on. I'm
Hot,
really
hot take on Palantir.
yeah, a hot take on
All right.
Palantir. You'll probably get a lot of comments on that.
That's
And by the
that's that.
way, I was absolutely right about Facebook. They were an evil force in the world for years. They finally figured that out and are pulling back from being evil. Forced by Apple and the EU, of course, but
Right. Well,
whatever. It happened
well,
eventually.
we've talked a lot about AI. If people want to find out more, just head to ChatGPT and ask it. Um, I'd love to get your take now also on the more general macro outlook. Obviously, we recently had that kind of debt ceiling agreement, or not exactly agreement, extension. Now, I think if you look at the pricing for the Fed hike, the next Fed meeting, now most people are pricing in a Fed hike for the next Fed meeting. What are your thoughts on all this, and what do you think about the current outlook, given the big rally we've seen of the recent lows?
Well, I think in the wake of Q1 data, Q1 was very hot. I think a story
Mhm.
that's really gotten lost is that everybody got a stealth tax cut in January, whether they in the US. Okay.
Uh-huh.
Um, this is because of fast growing nominal incomes, nominal
Right.
dollar incomes, and
Okay.
adjustments to the income tax brackets and deductions
Mm-hmm.
that lag actual inflation, lag actual wage inflation,
Mm.
right?
Interesting. Yeah.
So the tax rate, the average effective tax rate went up 2 percentage points in 2022 in January, and then is down again, is back down to where it was before 2022 in January. So everyone got on average, I forget the number I came up with, but per employed person, like something like 170 some odd dollars a month
Mm-hmm.
as a tax break on average, right?
It's not too
Nobody
bad.
knows about it because this is incredibly underreported. I don't know why it's incredibly obvious if you look at the personal income table. So
Mm-hmm.
that's where it starts. January was super hot, super hot. February and March less so, right? Uh, April PCE just came in kind of hot. So I think that's right. Another hike's coming now that the bank's crisis, quote unquote crisis, I never thought it was a crisis, is
Mm-hmm.
receding. The Fed has separated those two issues in their thinking. The banks are one issue to deal with in one way, right? And then there's the tightening they need to do on the economy.
Right.
But the actual conditions in the U.S., actual financial conditions in the U.S., they tightened up in March, but they loosened again in April.
Mm-hmm.
And we're back to where we were before all this stuff in March, right?
Right.
Because non-bank players are stepping in. Like, I mean, you want to talk about a sector that has a great play here is the BDCs, the business developed companies, right?
Okay.
Banks are cutting back on commercial lending. They're going to the BDCs, who charge a very high interest rate and have very tight lending. The good ones have very tight lending standards.
Mm-hmm.
I like Main Street and Sixth Street are my two favorite, but that's a good play right now because they're seeing asset growth, net asset
Right.
value, right? They're all, like Sixth Street just got clobbered because they had to raise money, right? It was good news. They have to raise money because there's so much demand for loans right now from them because the banks are tightening up, right?
Mm-hmm.
So on commercial loans.
Right.
So I like that sector right this second, but you got to be careful there because some of them are risky. Some of them are very tight, like Main Street and Sixth Street.
Mm-hmm.
So here.
So you're talking about Sixth Street Specialty, that's ticker TSLX, is that right?
Yeah, right.
Uh-huh.
And
Yeah,
Main Street.
it's very interesting with financial conditions loosening then. Do you have a particular outlook for inflation?
You know, it's been Q1 was disappointing. Things looked really good at the end of December. Everything looked like it was going the Fed's way. I had to really restrain myself from doing victory dances because it looked
Mm-hmm.
like it was all going right. And I was just feeling good about it as the year, as the December data started coming in January. I just felt really good.
Right.
And then Q1 was a big setback. Employment cost index went back up, inflation went back up, nominal consumption went back up, from that stealth tax cut and at the margin, people spent most of that tax cut, that stealth tax cut, right?
Mm-hmm.
So I think maybe things are calming down a little bit from that kind of that January catalyst. But we're gonna get before the next Fed. We get jolts, April jolts. We get at the end this week. We get April jolts and May jobs, and then very dramatically we get May CPI the first day of the meeting, the day
Right.
before they actually announce the decision. I
Mm-hmm.
think that one's going to be kind of crucial. I usually say that they've made up their mind going into the meeting. They've all made up their mind. I think that might not be the case this time.
Mm.
I think they may make up their mind when they see May CPI that first day. But
Right.
right now, I'm leaning towards another hike based on
That's
what we have now. I'm really being data dependent at this point.
right, of course.
We're down to, the pattern they did was ramp up to 75 basis points, do that for a while, ramp back down to 25, and just, keep going until they think they're done.
Mm-hmm.
And so now, since they ramped down to 25, I've been much more data dependent on, what's coming next. It was very obvious what was coming next for a while.
Mm-hmm.
When doing that ramp to 75, stay there for a while, ramp back to 25. It was
Right.
fairly obvious every meeting
Mm-hmm.
until I guess March was the first one with any kind of drama in it, really, for me at least.
Mm-hmm.
So I do think we're going to see some more tightening. And I think, a recession's kind of a 50-50 shot. Maybe the banks push that up a little bit. Maybe it's 53%, 55% recession. But if
Mm-hmm.
it does happen, I think we're looking at starting in Q4 this year or the first half of next year.
Mm-hmm.
Leaning more towards like Q1, Q2 next year if it does happen.
Mm-hmm.
Mm.
Right. So
But
in terms of how you're looking at then in terms of positioning for the next 3, 6, even 1 year, given that the stock market has gone up so much, do you think maybe now is a good time to take some profit and maybe wait for that recession to happen, or wait for the Fed to hike and then see what's going to happen next?
I'll just put it this way: I have a lot of T-bills.
Okay.
Interest rates are very nice right now. If you look at that
Right.
short, the very short stuff,
Mm-hmm.
gives you a lot of flexibility, right? And even the 3 months isn't that long, right?
Right.
And I'm not talking about, just for everyone listening, not talking about a short-term ETF. I'm talking about buying actual T-bills through your broker or Treasury Direct or something.
Right.
But rates are over 5% now.
Mm-hmm.
So, I think there's a lot of risk in this market that isn't priced in. There's a lot of risk for NVIDIA that's not priced in. But I think also the breadth has been terrible lately. And so, maybe there can be a rotation. Again,
Right.
I like to start at times like 2009 and get
Mm-hmm.
fully invested then and sit, for a long time. And we're in a very, we've been in a tumultuous period since, the pandemic started. Things were pretty sharp in February 20. I think there was maybe a recession coming anyway in 2020. But you look at February 2020 data, it's pretty decent,
Yeah.
But now, it's been very tumultuous. There's a lot of, I think, measurement error in the data, a lot of noise, ton of noise, very obviously a ton of noise month to month. And I think a lot of measurement error as well has creeped in for a couple of years since the pandemic started. 3 years now.
It's interesting. I've been comparing this period, I think it looks a little bit like 2006 maybe, where we're kind of seeing the first signs of that sort of the cracks start to appear, but it's not quite there yet. And, because of this hype around AI, I think stocks could, still go higher from here. But I think eventually we should see some kind of a sell-off. And I mean, that recession, it's been so announced, it keeps getting pushed back. But I think eventually
It's
we'll
really
see
amazing,
something.
right? I've been saying
The most announced recession in history, yes.
It will be, if it happens, it will be the most anticipated recession in the history of U.S. recessions. There's no doubt about that. And it keeps getting pushed back. Exactly. I was on the no recession, no recession, no recession, because I thought the Fed could get away with doing QT and interest rate hikes at the same time. I thought they could get away with a lower terminal rates back a year ago, back a year ago. But they've had to raise higher than I had hoped, and maybe have to keep going. Inflation is being very sticky in a lot of places. There's a bunch of services still recovering. That are, very, basically all the stuff that got clobbered really badly in 2020. Food and accommodations, recreation services, transportation services, all that stuff that got horribly clobbered. They're struggling still. They're still struggling to restaff a lot of these businesses, right?
Right.
Wage inflation is still high in a lot of these places. The big inflation worry I have is in healthcare, which has been very dormant for a while. And it's like it's finally, and the wage inflation in healthcare has been some of the highest besides leisure and hospitality. And I worry about healthcare inflation starting to drive the boat soon.
Right, that's true. Yeah, healthcare costs, especially in America, have been going up a lot. Now, before we started talking, we also talked about some particular stocks that you were interested in. As I let you know, and my listeners know, we have the Pragmatic Investor Portfolio, where I ask each guest to maybe give me one of their high conviction picks. And you made some interesting remarks on infrastructure.
Yeah, I think the most underreported story is, the fact that there was a giant infrastructure bill passed in the U.S. in 2021. It's $240 billion a year. Most of that goes to the states and local agencies who actually spend the money, who make the decisions with federal approval. Mostly we're talking about the Department of Transportation here. The first year went out last October. It started going out. Most of it went out last fall. The year of allocations, and the second year will start going out this fall. upcoming fall. There's 5 years of that of 240 billion going to the states and local agencies. This takes a while to get digested. There's a lot of permitting, legal challenges, and all sorts of things that slow these things down, right?
Right.
But it's already being digested. We already see states increasing their infrastructure construction spend month by month. I in the construction data from the Census Bureau, month by month, you go the public spending on infrastructure going up. It's up about 19% year over year now, and that's going to keep going because the federal money hasn't even hit yet. This is just the excess money the states had from the pandemic that they're spending on roads and bridges and stuff. So my favorite pick overall, say for the next 3 to 5 years, is Granite Construction. They've already run a little bit. They're not as attractive as they were a few months ago. And they've run based on, this work already starting to happen at the state level. And, like I said, up 19% year over year. And it's going to keep going for, the federal money stops in another 4 years of that. But, these projects keep going for a while. So another Longview Capital. This is another long-term thing. So I'm going to sit on Granite for some time.
It's good. Yeah. I mean, I'm looking at Granite right now. That's stock ticker GVA. And we've actually had a bit of a pullback in the last month, down about 4%. So maybe a good time to get in right now.
I just think that all these companies, so to back up, there was like a 20-year drought in infrastructure spending in the U.S. The last kind of surge ended 2003, 2004-ish, right? So it's 20 years of nothing happening. And these companies have been starved. A lot of them pivoted into oil and gas and other, construction areas to make up for the lack of infrastructure spending. But there's still a few pure play infrastructure companies like Granite, and they've been clobbered. They missed out on the entire 10-year bull market. Start a chart with the S&P and GVA on the day the market bottomed in March of 2009, right? And it's ridiculous. GVA's just underperformed as you could, S&P by so much in that period because it was a drought, and the drought's about to end. We're pouring water all over.
Right. Now, I also wanted to get your thoughts on a couple of particular sectors, some that I've been talking about. One would be regional banks, which you briefly talked about before. You said that there was never a banking crisis. Could you elaborate on that a little bit?
Okay. All right. This started with 3 banks that were very special cases, right?
Right.
2 crypto banks, right? And, and the fact that they went down without any drama took one of my crypto worries off my plate. I was very worried about those 2 banks because they were hooks into the Federal Reserve System for all this nonsense that's going on. And the fact that they failed unspectacularly was a huge relief to me, right? And then you got Silicon Valley, who had invested all this money into their relationships with a small number of VC clients at the end of the day, and all of their portfolio companies, right? And so you have a situation where this small number of VCs would direct their companies to take their check that they just gave them and walk it over to Silicon Valley Bank and deposit it there, right? And you had this weird situation where they were confident in all the money and time and effort they had spent in kissing these people's asses, right? That was not enough. They went on Twitter that weekend and decided to destroy their own bank. I don't understand. I still do not understand what these people were doing that weekend when they decided to destroy their own bank. It really was that whole week. They were going off on Twitter, trying to destroy their own bank. So that was no bank can survive a run. Without fractional reserve banking, we can't have economic growth, right? And so no bank can survive a run. And that, people lose a bit of confidence, but the deposit flight was not that bad overall. At certain banks, it was very bad, right?
Mm-hmm.
But a good, healthy banking system is one where banks can go down and not a lot really happens, right? That's a good,
Right.
healthy capitalist banking system. That banks can come under some pressure, some special cases can go under, and nothing bad really happens as a result. So
Mm-hmm.
far, right? That's a sign
Right.
of a very healthy banking system, in my view.
I don't know how capitalist it would be if you're kind of relying on the FDIC to cover all those deposits, though, right?
But that's an insurance fund the banks pay for,
Right. But
right? That's
well,
not funded by taxpayers. That's funded by the banks. So it's in the regulation forces them to buy insurance,
okay.
right?
Right. That
So
makes sense.
I'm forced to buy insurance for my car, for my home. Regulations force me to buy all sorts of insurance.
Mm-hmm.
So this is another type of insurance.
Right. Of course. Yeah. Makes a lot of sense. Yeah.
So anyway, so I never thought it was that big a deal. I had a little fun, playing the ups and downs of it, not with much
Mm-hmm.
money at the first couple of weeks, but um, I think long term the regional banks are a buy because they've been so hard, they're so badly clobbered, and most of them are fine. I can tell you one I like a lot,
Mm-hmm.
Cullen Frost.
Sorry. Come again.
Cullen Frost, CFR.
CFR. Okay.
Yeah.
What do you like about that one?
20% of their deposits are in their Fed account, on their Fed Reserve account. And they're very smart about their real estate portfolio. That's the next big threat is commercial real estate.
Right.
But
Of course.
the best deep dive I've seen, this is very surprising. The best deep dive I've seen on this came from some JP Morgan research. Really nice work by them, by the way. The estimated losses were overall, I'm sure there's going to be certain banks that are going to take it on the chin that have bad exposure in certain markets, right?
Mm-hmm.
Um, San Francisco, for example, commercial real estate's dead there downtown.
Right.
Um, anyway, but the losses were surprisingly small, and they modeled both office and retail with very large default rates and very low recovery rates. I was surprised at their assumptions that they were pretty draconian, and in the end, their assessment of bank losses were, they were real. I think it was 55 billion across the whole industry. That's
Mm-hmm.
real money, but it's not that much in the context of the U.S. banking system, right?
Right. Mm-hmm.
Um, and they also flagged life insurance companies as the other group that has a lot of office and retail.
Mm-hmm.
So that's the next shoe to fall for the banks. But I think overall, as a sector, they're fine.
Mm-hmm.
I mean, look, the U.S. is a little weird with all these small banks. No other country really has that kind of system. All these small independent banks making their own decisions, and possibly some very bad ones. But I think they're by and large good. And so Cullen Frost is just they're the most conservative Texans in the history of Texas. They're from San Antonio. They're literally. I think they could survive a bank run. I
Mm-hmm.
think they could literally survive a It's a Wonderful Lifestyle bank run where everybody showed up to get their money in one day.
Well, that's a bank worth holding in this environment. That's for sure.
And I mean, along with the Fed's facilities set up to enable that sort of thing.
Mm-hmm. Right, of course. Now, let's go ahead and let's run full circle and touch back on AI before we leave. Because I was talking to another essay contributor the other day, Michael Wiggins. He is focused on energy, and he was talking about how he was very bullish on energy because of how much energy AI would consume. And he quoted to me something, I can't remember the stat, but he said that training GPT-4, was equivalent to keeping tens of thousands of houses running for a year. Any thoughts on that? In the
Yeah,
energy
he's
sector?
he's absolutely right. And just to quickly go back to infrastructure, 75 billion for transmission and distribution
Mm-hmm.
electricity in the infrastructure bill. And we're going to need it because of exactly what he says. And everyone's focused on the training because that was the expensive thing in the research phase of all this. It's the inference now, what they call inference. It's these predictions of what the next word's going to be, right?
Mm-hmm.
Talked about the guessing of the next word that they're very good at, and sometimes not that good at. But
Right.
um, uh, and yes, now that these things are scaling into production, it's not the training, the electricity you spend money on for training, right? It's the electricity you spend in the scaling out a service, some
Mm-hmm.
sort of service built on top of a large model that that use a lot of GPUs. Each one of those chips goes 350 watts. Two of there's 8 of them in a box. You keep doing the math, it goes up quickly. So you know, he's right. He's absolutely right.
Great. Well, I guess energy, another interesting sector to look at, especially given we've had a bit of a pullback.
Well, maybe the next time we talk, if you're willing to have me back after my babbling, I know I babble and interrupt, and I'm a horrible guest, but energy storage, I think, is a big thing upcoming.
Well, like I said before we started, that's the point of the podcast is to hear people babble. I only exclusively listen to podcasts where people babble. So, uh,
But
so let,
utility scale energy storage, it's already happening. All the new solar installations are planned with storage co-located, but we're going to see this scaling up with new technologies that are not lithium based. So that's another trend I'm following.
oh, very, very interesting. And let's leave it at that. Keep people wanting some more. We'll definitely do this again soon. It's been great
I had a
having you on
fun
this.
time.
It's been great having you on. Before we set off, go ahead and just let everyone know where they can find you on Seeking Alpha, if anywhere else, and if you want, just a quick overview of what you do.
Okay. I write for the public side Seeking Alpha at Trading Places Research,
Mm-hmm.
and I also run a subscription service there, which includes portfolios, and that's where I do all this stuff I've been babbling about. I've been babbling about it to members since I don't know last fall, whenever. This is just the combination of all the things I've written for them about AI in much more detailed fashion um, for the service. That's called Longview Capital. Longview are 2 words, and I guess the links will be below. Is that how this works?
That's usually how I do it. That's right.
All right. Thank you so much, James. This was a lot of fun.
All right. Well, likewise, thoroughly enjoyed it and look forward to doing this again.
All right. Fantastic.
All right.
Fantastic.
Take care. Bye bye,
All right.
everyone.
Bye.